Most traders don't fail because of their strategy. They fail because of their psychology. The market has a way of exposing every weakness: fear, greed, impatience, overconfidence. And if the mind isn't mastered, no strategy in the world will save a trader. This video is not just another piece of trading psychology content that gets watched once and forgotten. It's designed to be the video traders return to before a trading session, after a tough day in the markets, or even during live trading, to reset mindset and get psychology back on track. Think of it as a trading psychology reset button. For the best results, let this playlist play in the background while trading, working, or anytime focus and discipline begin to slip. Repetition of the right reminders has the power to rewire the way the markets are approached. For those who want to go deeper, there's also a resource called The Ultimate Trading Psychology and Secret Strategy Blueprint. It's more than just an ebook. Inside is a framework for mastering psychology along with a unique strategy most traders completely overlook. It's designed to give structure, confidence, and a true edge in the markets. Stay tuned until the end of this video for more details, or check the description below anytime to explore it. But for now, let's get started, because by the end of this video, it will be crystal clear why psychology is the foundation of every winning trade ever taken. Here's the reality most people never face. 99% of traders fail, not because they don't know enough about the markets, but because they don't know enough about themselves. Think about it. The average trader spends hours studying strategies, memorizing candlestick patterns, testing indicators, watching videos, buying courses, all in search of that one strategy that will finally work. But when the time comes to place a trade, emotions take over. Fear, greed, hesitation, revenge, and suddenly all that preparation vanishes. It's like going into a boxing ring, fully trained, but panicking as soon as the first punch lands. The skills are there, but psychology collapses. Fear makes traders freeze. The setup is right there, the plan is clear, but fear whispers, what if it fails? What if this is the one that wipes you out? And so the trade isn't taken. Greed makes traders reckless. After a couple of wins, greed says, double the size, push harder, one big trade and you'll make it. And that's how accounts get blown up overnight. Impatience creates bad timing. Instead of waiting for confirmation, impatience says, jump in now, don't miss out. And the trade ends up being an unnecessary loss. Overconfidence destroys discipline. After a winning streak, overconfidence convinces traders that they can't lose. Risk management is ignored, rules are broken, and just like that, weeks of gains disappear in a single trade. This is the pattern that keeps repeating for most traders, not because they don't know how to trade, but because they don't know how to manage themselves. And here's the trap. Most people think psychology just means be disciplined or control your emotions, but that's surface-level advice. You can't just decide not to feel fear, not to feel greed, not to feel doubt. The human brain doesn't work like that. What really happens is this. Under stress, you always fall back to the level of your identity and habits. If your identity is weak, you'll act like an amateur no matter how much you know. If your habits are weak, you'll let emotions take control even if your plan is strong. That's why 99% fail. They don't change who they are as traders, they just chase strategies. And this brings us to the secret almost nobody masters, the shift that changes everything, the one thing that separates the 1% from the 99%. And it's not about willpower, it's about identity. The number one psychology secret that 99% of traders never master is identity. Most traders see themselves as gamblers, hobbyists, or people just trying to make some quick money. They don't trade from the identity of a professional. They don't trade from the identity of someone who has rules, structure, and discipline built into their character. And here's the truth. You can't act consistently out of alignment with how you see yourself. If deep down you still see yourself as someone hoping to make money, you'll trade like a gambler.
You'll over-leverage, you'll chase setups, you'll break rules. But if you see yourself as a professional risk manager, someone whose job is execution, not gambling, your behavior changes. Suddenly, discipline isn't forced, it's natural. Rules aren't optional, they're part of who you are. Think about this difference. An amateur says, "I hope this trade works." A professional identity says, "My job is execution. If this trade loses, it's part of the plan. If it wins, it's part of the plan. Either way, I did my job." See how powerful that is? Hope is emotional. Execution is professional. This identity shift is why most traders never make it. They keep piling strategies on top of an old mindset. It's like trying to build a skyscraper on sand. No matter how good the blueprint is, the foundation isn't strong enough to hold it. But once identity shifts, everything changes. Fear doesn't disappear, but it loses its power. Greed still shows up, but it doesn't control your actions. Doubt still whispers, but it doesn't change your execution. This is how the best traders in the world operate. They don't fight their emotions, they outgrow them. They trade from identity. And the beauty of identity-based trading is this: once it's who you are, it doesn't take effort to maintain. It becomes natural. You don't have to fight discipline every day. Discipline becomes automatic. This is the secret 99% never master. And it's the one thing that separates traders who are stuck in the cycle of blowing accounts from traders who steadily, consistently grow year after year.
Once identity shifts, the next step is building the framework that reinforces it every single day. Because here's the truth: identity alone isn't enough. It needs habits and systems to back it up. Just like an athlete has routines before a game, or a pilot has a checklist before flying, a trader needs a framework that makes the identity stronger. Here's what that looks like. Step 1, pre-trade ritual. Never sit down and jump straight into the charts. Take a few minutes to reset your mind. Breathe. Review your plan. Remind yourself, I am a risk manager. My job is to execute the plan, not chase outcomes. That short pause can completely change the way a session unfolds. Step 2, journal your emotions. Not just your trades, your emotions. Write down what you felt before the trade, during it, and after. Over time, you'll start seeing patterns. Maybe fear always shows up after a losing streak. Maybe greed always shows up late in the week. Once you see the patterns, you can prepare for them. Step 3, detach from outcomes. This is one of the hardest but most important shifts. Every losing trade that followed your rules is a win. Every winning trade that broke your rules is a failure. Professionals understand this deeply. Amateurs only care about the P&L. Step 4, reprogram your self-talk. Catch yourself when you say things like, "I need this trade to win." Replace it with, "I need to follow my plan." Language is powerful because it shapes identity. These may sound simple, but simplicity is what works. The traders who fail are the ones who ignore the basics. The ones who succeed are the ones who master them. Here's the key. Most traders won't do this. They'll watch a video like this, maybe journal for a day or two, then stop. That's why psychology never changes for them. But for the traders who stick with it, who make these steps part of their identity, everything changes. And when it does, trading stops feeling chaotic. It starts feeling structured. It starts feeling professional. This is the framework that turns the identity shift into consistent results.
Let's take all of this theory and put it into real-world situations. Because it's one thing to talk about identity, fear, greed, and discipline in abstract terms, but it's another thing to see how it plays out on the actual charts. The beauty of psychology is that once you see these patterns, you'll start recognizing them everywhere. And when you recognize them, you can intercept them before they control your decisions. Scenario 1, the missed opportunity. Price drops into a strong support zone that has held 3 times before. The confluence is clear. A trend line, a major Fibonacci level, and higher timeframe support all line up. This is the kind of setup traders dream about.
But here's what happens. Fear steps in. Fear whispers, what if this is the time it breaks? What if you buy and it goes straight against you? So the average trader hesitates. They sit on their hands, waiting for more confirmation. By the time they get it, the move is already gone. They missed the trade entirely. But the identity-based trader approaches it differently. They've already decided, my job isn't to predict. My job is to execute the plan. The risk is predefined. The stop loss is in place. Fear may still whisper, but it doesn't dictate the decision. The trade is taken. Win or lose, the plan is followed. And that's the key. The pro trader doesn't need certainty to act. They need structure. Scenario 2. The winning streak trap. Imagine 3 back-to-back wins. The account balance is looking strong. Confidence is running high. This is when greed shows up. Greed says, you're hot right now. Increase the size, push it. One big trade and you'll double this account. This is one of the most dangerous moments in trading because winning makes people reckless. The average trader listens to greed. They double the position size. They take a marginal setup they normally wouldn't. And in one trade, they give back everything they just made. But the identity-based trader thinks differently. Wins don't mean bigger risk. Wins mean the system is working. Risk per trade stays the same no matter how many wins or losses come before. The streak doesn't affect the process. That's how consistency is preserved. Greed is loud, but identity is louder.
Scenario 3. The losing streak spiral. Now flip it. Imagine 3 losing trades in a row. The stop loss gets hit each time. Frustration builds, doubt grows. This is when revenge trading sneaks in. The average trader says, forget the plan, I'll get it back on this next trade. I'll make it all back in one shot. And that's how accounts are destroyed. One emotional trade after a losing streak can erase weeks of hard work. But the professional identity trader reacts differently. They pause, they take a step back. They know losses are not personal, they're statistical. Losses are data, not disasters. Instead of forcing a trade, they review the journal. They ask, did I follow the plan? Were these good trades that just didn't work out, or was I sloppy? If the trades followed the plan, there's nothing to fix. Losses are part of the edge playing out. If the trades broke the rules, the lesson is learned and corrected before moving on. The losing streak doesn't spiral, it becomes feedback. Scenario 4. The perfect setup that fails. Another common one, you find the perfect trade, textbook setup, confluence everywhere, everything lines up. You take the trade with full confidence, and it loses. What happens next is critical. The average trader feels betrayed. They say, but everything lined up. This market is rigged. I can't trust my analysis anymore. They spiral into self-doubt, second-guessing every future setup. But the identity-based trader sees it differently. They say losses are part of the distribution. Even the perfect setup can fail, and that's okay. Instead of doubting themselves, they log the trade, note the conditions, and move on. Because here's the truth. Even the best setups lose. Professionals don't take it personally. Amateurs always do.
Scenario 5. The sudden news spike. You're in a trade that looks solid, and then news hits. The candle spikes violently against you. Panic ticks in. The average trader freezes. They don't close the trade. They don't move the stop. They just watch helplessly as the account drains. The professional identity-based trader reacts differently. They already know the risk before entering the trade. If news hits and the stop loss is triggered, that's the cost of doing business. They don't panic, they don't move stops, they don't pray. They execute the plan and live to trade another day. Notice the theme here? Amateurs let emotions make split-second decisions. Professionals already decided what to do long before the market tested them. Scenario 6. Overconfidence after the big win. Let's look at one more. The trader just hit a massive win. Maybe they caught a big swing move or nailed a perfect entry at the bottom. The account just jumped 10% in one trade. The average trader feels invincible. Overconfidence says, you've cracked the code. You can't lose.
the rules don't apply to you anymore. They start increasing size, skipping confirmations, trading recklessly, and before they know it, that big win is gone. But the professional says, one trade doesn't define me. My identity is consistent execution. My job hasn't changed because of one outcome. That's the difference. Amateurs attach their self-worth to single trades. Professionals attach it to the process. The pattern behind every scenario. If you look closely, every scenario has the same pattern. The chart is the same, the market is the same, the setups are the same. The only difference is psychology. The average trader trades from emotion. The professional trades from identity. And once you see this clearly, it's impossible to ignore. You realize that psychology isn't just important, it's the single biggest factor in long-term success.
Practical exercise for you. Here's something powerful you can do after this video. Think back on your last 10 trades. Don't just ask, were they winners or losers? Ask, what was my state of mind during those trades? Was I trading from fear, greed, doubt? Or was I trading from identity? If most of your trades were emotional, don't judge yourself. This is normal. This is the 99%. But it's also an opportunity, because once you become aware of it, you can change it. And when you start trading from identity, those same market scenarios play out completely differently. What used to be emotional chaos becomes professional consistency. That's the shift. Same charts, same markets, same setups, different psychology. And psychology makes all the difference. By now, it should be clear. Psychology shapes every trade. But here's the bigger question. How do you actually build the kind of mindset that keeps you steady in the markets, no matter what's happening on the chart? The answer is resilience. Mental resilience is the invisible shield that protects traders from fear, greed, doubt, and overconfidence. It's not about never feeling emotions. It's about developing the ability to act correctly even when emotions are screaming the opposite. Let's break it down. Why mental resilience matters. Think about an athlete. Even the best athletes in the world feel pressure before a championship game. Nerves don't go away. But the difference is they've trained their mind and body to perform despite the pressure. Trading is the same. The market is unpredictable, volatile, and often ruthless. The trader who lacks resilience will crack under that pressure, closing trades too early, chasing moves, or freezing at the worst possible moment. The resilient trader doesn't avoid the storm. They walk into it knowing they've trained to stay grounded. The power of pre-market rituals. Resilience doesn't start when you're already in a trade. It starts before the session begins. Most traders roll out of bed, open the charts, and immediately react to what they see. That's a recipe for disaster. Professional traders follow a ritual. Maybe it's reviewing higher time frames. Maybe it's journaling yesterday's trades. Maybe it's writing down the emotional state they want to maintain that day. Patience, discipline, focus. This ritual becomes an anchor. It sets the tone. It says, I'm in control of my mindset before I ever click buy or sell. Here's a practical exercise. Before your next session, write down in one sentence the identity you want to trade from. Something like, today I trade as a disciplined professional who follows the plan without hesitation. Keep that sentence visible on a sticky note, on your desk, or even taped to your monitor. That one sentence has the power to reset your mind every time emotions try to take over.
In-trade mental reset techniques. Even with preparation, emotions will show up during the trade. The key is not to fight them, but to redirect them. Here are a few techniques that work. The pause button. Whenever fear or greed spikes, force a 30-second pause. Take your hands off the mouse. Breathe. Ask, am I about to follow my plan or my emotions? That pause alone can save your account.
process-focused self-talk. Instead of saying, "I need this trade to win," say, "My job is to follow the plan." It shifts the focus from outcome to process, which removes pressure. Visualization in real time. Picture yourself at the end of the day looking back. Would the future version of you respect the decision you're about to make or regret it? That mental fast forward helps align decisions with long-term identity. The goal isn't to eliminate emotion, it's to create enough space to act with discipline despite it. The role of post-market reflection. Resilience is built after the trading day as much as during it. Most traders close their platform and move on without reflection, but professionals use post-market reflection as a training ground. Ask yourself, did I follow my process? If not, what emotion pulled me away? How can I prepare better next time? Here's the key. Don't just reflect on mistakes. Reflect on wins too. If you followed the plan, that's a success, even if it was a losing trade. Reinforce the behavior, not just the outcome. Over time, this reflection builds resilience because you start to see trading as a long-term process rather than a single trade. Turning psychology into a daily practice. Psychology can't just be a concept, it has to be a practice. Just like lifting weights builds muscle, daily mental practice builds resilience. Some powerful daily practices include journaling emotions before and after trading, meditation or breathing exercises to reset focus, reviewing a trading mantra or identity statement every morning, replaying psychology-focused videos or playlists to anchor your mindset, like this one. These practices don't take long. 5 to 10 minutes a day is enough, but consistency compounds. In a few months, your resilience will be unrecognizable compared to where you started.
Identity plus routine equals resilience. The real secret isn't just discipline or mindset tricks. It's combining identity with routine.